Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Thursday, everyone. Hope everyone is doing great. All right, so let's get to it. Gotta grab my planner here. I got a bunch of questions yesterday about a few symbols. Let's see, what were they? Oh, Roblox, RBLX, and coin, COIN. And let's see, Roblox, coin, and what else was I getting? Yesterday, I think we talked about Netflix yesterday. So yeah, so those were two of the symbols, and you'll see I got RBLX up on the screen right now. So what about RBLX? So gang, here's the thing, and I would say the same thing with COIN, all right? So first of all, a lot of you might have noticed that some of the biggest increases in position sizing in ARK, it was Roblox and COIN. So Coinbase and Roblox, I think both, let's see, biggest increase in sharehold, those two, as well as 3D System Score, so DDD. But two of these are IPOs. So this is what I always say about our IPOs or the direct listings, the DPOs. When you have a direct listing, and we talked about this when coin came out, when you have a direct listing, spot was one, work was the other, you're going to notice there's no quiet period, there's no holding time. So there's going to be selling on day one. I mean, it's scratch off lottery ticket time, and you're going to see those liquidations on day one. That is sort of a hallmark of a DPO. We've seen it now twice. So I don't know, this is not something that we are not aware of. However, drop an anchored volume weighted average price on the born on date of the stock. Watch the way in which price action, it's going to take a little while, but watch the way in which price action begins to stabilize around it. Too soon to tell. I think plays on either would be momentum based, purely really technical in terms of very short-term technical patterns and very short-term moving averages, because clearly we don't have that much data. But interesting possible Fibonacci retracement level here. But again, we don't know enough. You'll notice I don't even have, let me see if there's any other way I could pull up some volume on this thing. Let's see. Yeah, there's just not even anything volume-wise really. You can see there's your point of control. So for those of you that are wondering, all right, Rog, where's the point of control on RBLX? Where's the single level with the most volume in RBLX? And on coin, there you go. It's that white line cutting across it. We're going to have to utilize volume and those volume weighted average prices to understand. So for those of you that I got quite a few emails on those two, IPOs, DPOs, same idea, drop the volume weighted average price, but do not expect DPOs to head up straight. In fact, they're more bearish on their initial launch than IPOs are. All right, so I hope that helps. I've been getting a lot of questions about those. And again, they're two huge ARK holdings. But gang, I do want to remind everybody, and this is not any knock against Kathy Wood or ARK, but remember, they can buy and they can help put in a floor, but they can't rally a market. So if you are following, and I think RBLX and COIN being, again, two big surges in their holdings, remember her time horizon, 5 years. So keep that in mind, and she will buy dips. So be careful when you're following somebody. Last year, she'll probably even admit, was an anomaly. You go all in on Tesla, and Tesla has the kind of year 2020 does. I think a lot of people are expecting that kind of year again from her, and that's just unfair and unrealistic. All right. So by the way, not yesterday, the day before, and this is a really two important videos that I would love for you guys to take some time to take a look at. One is, and where the heck is it? Here we are. One was this tail wags the dog season. If you head on over to Simpler Trading, the YouTube channel, you'll see a tail wags the dog season. Heck, if you actually look that up, I found a tail wags the dog video that I cut 3 years ago. It's a consistent thing that we talk about, which is when for futures traders, ETF traders, individual stocks can move the market. We will have an upcoming issue of the Countdown Trader walking through 642, walking down the importance of earnings for futures traders. I think futures traders tend to overlook it. The other thing I was, recommending you guys take a look at would be the update of is today's right here, is today's sell-off extreme? It talks about actually a great scene from the movie Margin Call and what to do with historical volatility. I'll tell you, gang, not one in probably 50 traders know what it is, and not one in 100 even do anything about it. If you understand historical volatility, you are going to have an unbelievable edge over other traders who don't look at it, who are just looking at the surface price action view of trading. All right, so got a question here. Could we take a look at LI? Sure. LI. Yeah, it's in a downtrend. I mean, I don't know what it is you want to do with it, Kamal. I mean, I don't know if you're shorting it or whatnot. So in a market that is overall bullish, in other words, I would not take LI Auto. I have no idea what LI Auto is. I would not take LI Auto out of the context of the overall market. If I'm looking at a stock that's pushing lows while the larger averages are pushing highs, I'm getting into a very niche stock, a niche group, a niche type of approach to sort of stock picking where I'm sort of bottom picking. I would look for a 1, 2, 3 reversal here, or I would just continue to short this as long as it remains double red, but there's not much I can do with it, my friend. Now, that doesn't mean there's nothing you can do with it. It just means that within the context of what I look for, which is index sector stock, what are the broader averages doing? What are the heavily weighted sectors within them doing? And what are the stocks doing within them? That's where my emphasis is going to be. So if, and this probably, is really important to mention. Gang, I look at the markets the way I look at the markets. In other words, I only have that playbook. It's like being a coach of a football team. That's the playbook that you've got. Could be a great team, right? Hopefully it's a pretty good team, but you're operating from that playbook. And so if I don't have a specific play to run for, whatever the market is doing, I can't do anything. And that's probably the most important thing traders learn when they get a few decades into their trading career, as I am now. I stick with my playbook, right? So again, it doesn't mean that there may not be a play out there specific to what you're trying to do. I just don't run the plays for it. I hope that makes sense. All right, Schlumberger, earnings tomorrow. Yeah, this has been, I'll tell you what, this has been a tough one. I've been frustrated by this one, and I'm glad to see it come back a little bit. Schlumberger is really frustrating. And Schlumberger, gang, I believe as tech has been heading higher, we've seen the reflation trade, especially when it comes to energies, really struggle to find support. So as much as I've loved Schlumberger, or really broadly the XLE, the OIH, since the beginning of the year, realize, and this is a really difficult thing for some traders to accept, something could be very good to you for months and months and months, and then you're going to have what I call the one last trend follow. If you look at Ed Seykota, they ask, what's the most important indicator? Trend. That's what he'll say. He goes, what's the most important indicator after that? He'll say trend. And then after that, trend. So our first, and he's a legend, right? We all stand atop the shoulders of giants, whether we know it or not. The great traders know it. Novices don't. Find the root of what it is you are trying to excel at, and you'll speed along your learning curve so much better. Ed Seykota definitely influenced my love of trends, and it's the most important thing. And whether you know it or not, everybody out there, not everybody, there's some exception, but very few. Most people, whether they're momentum traders or trend followers, will do best in an uptrend. It's just that simple. So if I've lost the uptrend, which I have, I took that one last trend trade, and this will probably be it. But can I begrudge the one last trend trade? I can't hate on Schlumberger. It's been good to me since the mid 30s, right? So if I was too afraid of that one last trend trade and getting shaken out, I never would have had a 16, 18 point run in XLE or in whatever has been heading higher in the reflation trade. Don't count the reflation trade out. There will come a time where tech and the reflation trade will coexist. They will, because we are in reflation. But attention has definitely been diverted from these especially the energy reflation trade. So I'm going to have to let that go. Personally, I'm going to end up taking those one last trend trades in a number of oil stocks, but not in oil. What's really interesting is oil is not struggling as much as oil stocks. So the toughest thing is to let go a stock that might have performed fabulously for you in recent memory and just isn't the same structure anymore. Got to let it go. So, and I'm telling myself that too. All right, next up is, hey there, James, Disney. All right, Diz has wick below the previous low while XLC is trying to bounce off the wave. Is the setup in Diz still valid? Now, I don't think so, James. I don't think we have anything in Diz in Sector Secrets. I think we were watching it, but we didn't execute anything in it. Is this the relative outperformer within the XLC? And the easiest way to do that is with our handy dandy multi-chart here and pulling up XLC, which I'm going to do right now. And so what we're trying to break down, and this, James, so I'm kind of telling the rest of the group, what we're trying to break down now is where is the relative outperformance in XLC? I would go with XLC. The problem is the option chain is just crickets and tumbleweeds. Facebook and Google are oftentimes very cost prohibitive. Google would definitely have to be put credit spreads or call verticals. Facebook is pricey, but not tremendously unaffordable. There's not a lot to love in, even though XLC is moving higher, know that it's moving higher because Facebook and Alphabet are moving higher. There's not a lot when you go down that weighting, the list of heavily weighted stocks. There's not a lot to love in XLC, except for the fact that this is a high concentration weighted ETF where the top three names are just moving higher. Even the fourth in Verizon is doing okay. But I don't call this a great ETF when you start looking down the weighting. It's really the top three are just carrying the ETF higher. So I'm not looking at Diz. I don't think we have an open trade in Diz. What would I do with it if I'm watching it? I think at this point, you'd probably want to start thinking about cutting it loose, depending upon where you are in terms of risk to your account and your initial stop loss. All right. But James, if you want to put the chart in the Sector Secrets room, I'll take a look. But yeah, I don't believe we have anything in Diz. We might have been looking at it, but I don't think we have any exposure to Diz. But at the moment, I don't know that I want any right now. However, if we're going to get a bounce, this right now in this Darvis zone would be about as good a spot as any to do it. Okay. All right. Yeah, you got your coffee ready for charts and coffee? All right. Yeah, I'm with you. I'm with you there, Raymond. But you know what? Not only am I doing a little coffee today, I am also having some Jocko Go. Can you guys see that? That's pretty good. The Jocko Go. Holy cow. I think it might have made me a little aggro this morning. So my futures folks, prepare for salty Raghee. I think the Jocko Go made me a little aggro, but it's really good stuff. It is really, really good. Every now and then I'll go have a little energy drink. Kill Cliff is pretty good. They have one with CBD in it. It's pretty good. Low sugar, no sucralose and all that nonsense. But this one's sweetened with monk fruit, actually, monk fruit. All right. Let's see. Next up, PSW. Good morning. You have a live session every other Monday, dual broadcasting with the Futures Room, and YouTube is the same link that we can follow you. Not this link, no, PSW, but you'll wanna go to the Simple Trading YouTube channel and click the bell icon, and that way, whenever we have any new videos, you're notified. Or on the day, if you don't want to be notified of every new video, because we do have a lot of content coming out of the channel. If you don't want to be notified to it all, just keep up with Charts and Coffee. And on those days that I have a dual broadcast, I will let you guys know. But yeah, it's every other Monday. So I think I'll be going this Monday. Yeah, this Monday should be my turn. to dual broadcast. So thank you for asking. Hey there, Tom. Good morning. How do we roll our futures position in copper? Sure. Okay. So if you've got, so this is a great question. We don't get a lot of nuts and bolts questions about futures and charts and coffee. So thank you, Tom. So this is how you do it. Number one, I don't roll, right? All rolling means is that you're just exiting the current contract and you're just going to buy whatever the next contract is at whatever price it is. We never want to do that. All right. We never want to do that. So what I'm showing you right now is, I know it's really small, but in the margin on the right, there is a, right here. This is the J contract. This is the K contract. Look at where the size is, and then look out, then it goes out to N. That's July. So the movement is going where? It's going out to July, right? It's going out to July. So that's where, if you're trying to build a position, you're going to go out to the next front month. Notice we skipped right over June. Just because there's another contract doesn't mean that's what the front month is. And then that's where you want to follow open interest and volume. So then you want to know when that K contract expires. It expires at the end of this month. So yes, if you want to play trend following in copper, as we have been, I have been mostly in May, right? So by the end of this month, I'm going to have to be out. But today being the 22nd, and when do we start thinking about rolling? Usually I want to start thinking about rolling 2 weeks before first notice date. So the next pullback buy that we take is going to have to be July. That's just the way it is with futures. And really, this one back in here, 12th and 13th, I mean, that could have been July as well, right? So if you're thinking ahead, here we go. If you're thinking ahead, give me 1 second here, gang. There we go. If you're thinking ahead and you're thinking, do I go K here, which is May, or do I go N? And I know that first notice date is the 30th. That's where, how close am I to that 2 week window? And that's where you might say, you know what, I'll go with N. So I hope that gives you the mechanics for the decision-making process. And that one was a tough one. But I actually don't mind if we end up rolling out of K, which is what I'm going to end up having to do, because the next pullback will be will be July, will be that N contract. And we might have a little bit of exhaustion here as we're coming up to the contract high here. So thanks for the futures question. I appreciate that. And yeah, for those of you who don't know, I'm in both the Sector Secrets Mastery, which is where my options and ETF trading and stock trading is. And then I'm also in the futures room, like I will be in about 2 minutes, to do our futures and our futures day trading. And is the cat making a cameo? There he is. Cat's making a cameo today. All right. Next question is, bear with me here, gang. Can we take a look at Etsy? Hey, they're living. Sure. Let's go take a look at Etsy. All right. So always start with structure. Yes, volume will help, but always start with structure. And this is a choppy market, okay, period. Overbought, oversold, ready, aim, fire, slow stochastic. All those things will be helpful. Continuation 1, 2, 3 patterns. But I don't want to prioritize a sideways market in an overall trending higher market. So if it's going to play catch up, terrific. But I can't say that it would end up on my list of things to do. And there's not much for me to do here other than pay attention maybe to that point of control if I'm looking for support level to buy off of. That's really all I've got there. Not a lot to work with. Again, please be discerning when a market is choppy. When a market is choppy, there's another example I saw scrolling down here. Piton. And today, man, that 20 minutes went flying by. Wow. Some people ask me about Piton. Piton actually completed the 1, 2, 3. And as long as it does not make a lower low than the March 5, it's still on. It's still valid. But the problem is we're getting so close to earnings. So I would not short Piton. It's actually triggered a long position. But it's definitely still chopping about. So what's the problem with something like Piton? It's the fact that in an overall rising market, this is a work from home stock or a train from home, gym from home stock. I don't know that some of these narratives, look, I've watched my reflation trade kind of fizzle out. And some of these names, I'm not saying that Piton is done, but reopening is not good for Peloton. So there's that narrative, right? The narrative is only so good as whatever is being discounted. Is that narrative discounted? Sure seems like it. I don't know how much of this is an earnings factor, but we definitely want to stay above that March 5 low. Let's see. Can we take a look at Chewy? All right. CH. Now, I don't think Chewy, so a lot of folks have asked me if Chewy is a reopening stock. I don't think it is. I don't think it is. I think that it benefited, but I wouldn't call it a stock that should necessarily suffer from reopening. I don't consider it like a train or work from home kind of stock. But I think what's really interesting about Chewy, and thanks for the question, one of the things that we can focus on here, if you want to look for the long, is put up a ready aim fire, use a slow stochastic, yeah, and then look for whether or not there is a bounce to be had. I mean, we're past earnings. What I don't have here is a volume ledge. I don't have a point of control. I don't have any VWAPs helping me out. I have a sideways choppy market after a sell-off where I need to find when and why and where the market wants to, drive back into Chewy. And remember, Chewy is not moving with the broader averages, gang. Keep that in mind. All right, so let me take, oh, no, it's 22 after. Okay, I got to go. But yeah, keep, I appreciate that, Rayman. Yeah, keep that in mind, gang. If a market is not moving with the broader indices, if a specific stock is not moving with the sector, if a specific stock is a weak stock within what's overall a rising tide, kind of as much as we want to be a blue light special trader, as much as we want to be looking at opportunities to the long side, be careful sort of bottom picking stocks that seem to maybe be ripe to play catch up, but may not really. So think about the narrative that kept them higher. Ask yourself if that narrative is still in play, because if it's not, maybe price action is telling you something. I had to accept that with energies, right? It's frustrating. It ticks me off. That's going to be a number of trades that I'm going to have to just take my medicine on. And that happens, right? Never makes me happy. But at the same time, if I don't acknowledge that and don't accept it, I can't refocus on new opportunities. All right. With that being said, sorry I ran over a little bit, but I'll see you guys tomorrow, same time, same station for Charts and Coffee. All right, gang, be good to each other.